Hey guys, welcome to the second time I've made this video. I just done one 20 minutes ago. Same video, I forgot to press, well, I left it on pause. So I got to the end, came to stop it, and it wasn't running. So here's our second attempt at doing this video lesson. So what I want to talk about in this lesson is the importance of leaving daily levels on your chart. Well, that's part of it. Leaving daily levels on your chart. So as you form new highs and new lows, I noticed a lot of people are taking the line and moving it up, taking the line and moving it up, and not leaving support and resistance lines throughout the chart. So as price action comes up and down throughout the day, you're not understanding why it's doing what it's doing. So we're going to look at this, and then we're going to do a trade recap for Friday on Facebook and Nvda. Okay, so let's start with this. I want to look at this chart from Nvda from a while ago because it's just something I know it's in my mind. It's a good example. It really reacts and interacts well with previous areas it's put in intraday. So first thing I always do is when something puts in its first high of the day, okay, not necessarily the 9:31, but like the 10 o'clock push. Okay, first thing I always do is mark that. Well, you would do, wouldn't you? Because that's your high of the day. At the time, that's your high of the day. So let's put in our high of the day here. Now, I always have a dotted line for high of the day. Okay, I like a dotted line if possible. I can't do it on TC2000, but on TOS I can put in a nice dotted line. Okay. Then when it pulls back and it holds a level, okay, it was kind of around the VWAP, but I always put in a level at the bottom too. I'll do that in a second. I'm just, if I would do it now, this bottle is done. Here we go. Put in the line here, but I want to change the color. I want to change the color to mauve, violet, whatever. Okay. Now we've got another high here, new high of the day. So we, as you would expect, we put on our line there. Okay, now also if the pre-market action has been decent, we put in a pre-market line 2, which is there, and this one is always blue. Okay, that's my pre-market high. Okay, if price is moving down, then obviously I'll mark in my pre-market low too. Okay, that's fine, but I'm not going to on this example. So there's our pre-market. There's our levels for the day. Okay, we've pushed out. We've pushed out the gate. We've pulled back. We've held the VWAP, and we've pushed up for our first 10 o'clock reversal. Okay, notice the time: 10 a.m. 10 a.m. reversal. Pulls back, so we put in our high of the day. We pull back to just below the VWAP. We hold and we push, so we mark our level where it's held at. Always do this. I always mark the level it's held at. Then it pushes, and you can see it starts to interact with the previous level. A couple of spikes, but it's nothing. It fails at that level. It pulls back to the EMA 50, and it pushes nicely up through the high of day, forms a new high of day. It pulls back. Okay, I'm not talking about how to trade this. I mean, there's your trade. If you're wanting to know how to trade this, by the way, there's your trade. Okay, there is your lower high. Okay, that's been covered in so many lessons. Okay, if you're looking to shorten a video here, you wait for your signal, because there's no top signal there, but there is here your lower high, so you take it there. Anyway, so let's imagine we took it there. We played down. How would we know the price was going to hold 147.17 and not come down to 147? Why would we think that if it wasn't for this line? Because we have our little support line put in by this bottom there. It holds, it pushes, it comes down, it tests, it holds. We get tweezer bottoms, a good signal to take it long. It's held support, tweezer bottom, long. Okay, that is a long signal. Comes up, we've got our high of day test. Now I see so many people in the room saying, is this a high of day? I mean, it's either high of day question mark or Kelvo is this sorry, a double top question mark or Kelvo is this a double top? And you know, these are the easiest things to see. I mean, if you can't tell that's a double top, I mean, come on. You know it's a double top because you put your line in. It's your high of day line. It's double topped. It's failed. It's given you a lower high here. You see these two? If you want to talk about subtleties, look at those two. Okay, and I will annotate this. Okay, you see that? This is why I've actually got this on screen share with myself, so that I've got an annotating tool, a little pen. You see the subtleties of those two wicks. Look, there and there. You've got another tweezer top in a way. So this is a lower high with those two wicks. Beautiful. Okay, take it. Now we come down. Okay, notice how it interacts with this line here. We've got another level there we put in earlier. It worked there. It had some reaction there. Now it's interacting with this level here. It breaks, it pushes down, buyer's candle, pushes up, and it fails and interacts with this level here again. Now, why would we use these levels? Why use these levels if we've got things like the EMA 50, where you say, well, it failed at the EMA 50? Well, yeah, it did. But what if you were trading this on a 2-minute chart? You wouldn't have your EMA 50 here. Your EMA 50 would be somewhere else. It would be up here. However, you would have this level, so you would understand why it's coming into this level. And if it rejects it, it would give you confidence to stay in the trade. Okay? It pushes down. It holds here. It pushes up. It pushes up through the EMA 50. Why wouldn't we panic? We wouldn't panic because we've got our line here. We've got our level. Our last line of defense before we take some shares off. Give it to there. We know it works. It's worked there. It's worked there. It's worked there. It's worked there. It's worked on that candle. Why won't it work here? Of course it will. So let's let it prove itself. Let's let this level tell us how strong it is. And it was strong. Pushes down. Pushes down. Didn't really give too much of a stuff about this level on this occasion. But now look, we hold our pre-market level. Comes down, holds the pre-market high, pushes up. So if you're short, well, with it holding this and this buyer's candle right here, this tells us that we can start covering some position. Okay, so these are the subtleties, not only in candles, but these are the importance of putting in these levels. Okay, stocks love levels. Okay, on to Facebook from Friday. Some nice examples of smaller yet still important levels. Okay, so here's our first push out of the gate, and we get a tweezer top, high of day. I would normally mark that up. Might be of some importance. There we go. Now, we've got lots of steps. When something pushes up in a parabolic way like this, it always steps. Push, pull, push, pull. I like to mark the top of the steps because, oops. Yeah, I like to mark the top of the steps because, for me, very often and more often than not, these will help on the way back down again. And I'll show you why, and I'll show you how it works. Pushes, it pulls, it pushes, it pulls, it pushes, it pulls. Every time it pushes and holds and pulls, okay, I like to mark up a level. Now, we don't want too many levels on our chart, but they're important. If we can identify them by by a dotted line, it will make it easier to split it from other things. But they're important, okay? I always like to put them in. Some of them will work, some of them not. More often than not, they will. The nice thing about TC2000, you could do this on one board and then trade from another one and just keep your eye on this. And obviously we mark up our high of the day. Okay, Now, and we also mark up our first major pullback. Look, okay, mark up pullbacks. This is a pullback that holds. So this line, little one here, it's neither here nor there, but I'll just show you the importance of pullback lines. Okay, so there we have our chart. Okay, and we also get this little fail here. I'm going to put this in. Now this was quite painful, I know. I know a few people in the room took this trade here and stopped out here and didn't allow it to prove itself, and that's painful. Talk about that in a second. So Facebook, you see, it pushes and it holds a level and it pulls. It pushes, holds a level, pulls, push, pull, push, pull, push, double top, pull back. Okay, pull back. We mark our pullback level up. Now let's see if it works. Let's see what works. Our high of day pushes, pulls back to this purple line we've marked up, and you can see how we start to interact with this purple line. We push up, we pull back, we interact with the purple line, we push up. When you get a push up like this and a pull back, put a mini line on it. Okay, we're looking for a mini double top. We get a mini double top, we get a fail, we get a lower high, interacts with the purple line, we get a push up. Okay, we get a push up to the level from here. Look, okay, and I hate putting too many lines on this, guys, but look how it works. Okay, if you put one there, you would see this. Look. Okay, now we've got a range. We've got a range here. Breaks out the range. It comes down. It tests this area. Look. Okay. I know it's a whole number, but if you didn't have a whole number marked on your chart, you might not see it. It reacts with this whole number. It breaks the whole number. Pushes down. Pushes down. Now it starts to react with this level we've got drawn up. Okay. Pushes into the VWAP and it fails. So can you see how important these levels really are through the day? Okay, so make sure when something makes a high and pulls back, you don't keep moving your line up. Leave it on. Okay, leave it on. If you don't like the line, you can make it thinner. You can make it less transparent, more transparent. Customize it how you want, but use the lines. Okay, use levels for trading. Now, while we're looking at this, let's talk about the Facebook trade. So we'll turn this into a trade recap now. Okay, actually, first thing we'll look at is what are the subtleties of this. Okay, what are the subtleties of this that told us the top was in? Okay, let's clear the drawing set. Okay, now why? Actually, I'll tell you what we'll do. Okay, gone over to TC2000. I've already got these lines drawn up from my chart on Friday. Okay, let's have a look at on Friday. What about this? Because somebody asked me, because I took my trade here at 152.33, I believe it was. It was it really was a good entry. And somebody said, what made you get an entry on this as opposed to this? Why did you not take it there? Why did I not take it there? Why take it here? Well, I did a video lesson on this last week about this exact setup here, okay? And there were some subtleties of this one that these didn't have, okay? Now, first of all, on these just were non-goers for me, and I'll show you why. You can see every time it tries to pull back, it puts in this rounded shape. You see that? Okay. Each time it just comes and it rounds, it holds the moving average 9 and it comes around. Okay. They were never a consideration. There was one here where it comes off the whole number. The only way I would have taken this, to be honest, is if it had come back up shouldered over, given a double top or a lower high, and gone on. Okay, and then you take the trade there. The way the candles were, they weren't making lower highs. They held, okay, and they pushed and they hashed and they pushed. It didn't tell me it wanted to fail. I don't know. It was different. It was too close to the moving average 9 for starters. I'm looking for separation from the moving average for that little push. If something really wants to fail, it'll push and it will pull and it'll create this little void in here from the EMA 9. Okay, in the case of this, so why didn't I take it there? Why wait for this? The difference is this is too fast. It pushed and it failed instantly. So I would have taken this had we had pulled back, but I was looking for the lower high or the fail there. That's what I was looking for. Okay, that was the trade I was looking for. It didn't happen. It pulled and then it pushed and then it pushed back through. The difference here is we get the separation, we get that little area where it pulls up from the moving average 9, but then we get these candles, look, and this is what we're looking for. Do you remember the video lesson? We're looking for these candles here. We're looking for the one with the nice long top wick where it gets sucked back down again, the seller's candle. And then we get the doji with the lower high wick. Okay, then we get another doji. We get a little hammer and then we get a doji and another doji, like a long-legged doji, and then another. But if you look at the top wicks, okay, that's why I took it, and I took it there. Okay, risking off there. This is the subtleties of candlesticks. Okay, when you're looking for a top reversal. Now you got 6 minutes on this to decide. With something like this, you got no time. It gives you enough time to work out your risk reward, how you're going to do it, how you're going to play it, and where you're going to take entry, where you're going to stop out. The first thing I thought about on this trade wasn't how much money I would make, it was how much money I would lose. I knew exactly how many shares I could take, given how much money I was prepared to lose. I didn't know where it was going to go. It could have gone on and pushed up and stopped me out. It could have done anything. However, I knew when I took the trade exactly how much I was going to lose. That's the main thing we need to do, guys. Okay, is make sure we know how much we're going to lose. Okay, right, let's just clear this. Okay, hang on. Okay, so this was the trade I took it. However, I know some of you guys in the room took the trade here on this lower high, which is fine. A nice little trade, nothing wrong with that whatsoever. However, you stopped out here. Okay, you stopped out there, guys, and this was like really kind of annoying. It's sad. It's not annoying in that respect, but it is to see you doing this because you took it there. I can't understand why you stop out here. It never breaks this mini double top. You need to relax, folks. You need to let them do it. Okay, this was a free trade. If you took it here, okay, and you seen it was holding this little area here, which is fine, which it is, look, it's holding this little area. Okay, it's holding that line, that's fine. So you recognize it's held it. Maybe you've taken some off there, half off, just in case it fails. It's fine, you've locked in 30-40 cents per share on your first party trade. But what you get here is a gift. Okay, you get an opportunity on the hold of this mini double top. You get an opportunity to add back into your trade again at the same price you got your first fill. Look, okay, exactly the same price. It's a gift. This here was free money, whether it be 50 bucks, 200 bucks, 10 bucks. It was free money. Here we can add back in with the same conviction we had here, and we can hold. Okay, so now you've earned enough money here to cover your loss if you stop out here. So either way, your trade's going to be green or scratch now. You're in the driving seat. Don't stop out here, guys. If you're going to stop out and you took it there, you stop out here. You at least let the double top test. Okay, you at least let this double top test. Okay, you don't stop out here. Give it time to chance and prove itself. Let the double top test. Stop out here. Okay, just above the half number. So this is the trade that I took. This is the trade that some of you took. Some of you stopped out for some reason, some didn't. We got lovely trade on it. Okay, and it comes down, it holds the levels. We just talked about these levels. It holds, it pushes, it holds, it pushes, and then here, thank God, we got the bad news that came in here. And obviously this was a gift as well. We've had 2 gifts on Facebook in one day. But the main thing here is when you take a position, stand your ground, guys. Come on, stand your ground. No reason to have stopped out here. No reason. And the fact that you had to sit and watch this was soul destroying, really. And I did feel for you. However, hopefully you can take something from this and make sure that you don't do this again. You must risk off the right levels. When you take a lower high, you really still need to risk off this double top. Okay? Because this is your true level. This is a good level, but this is your true level. Okay, if you're going to take a lower high, take a size where you're prepared to risk off your true level. Okay. Okay, Nvda. Nvda we took in the afternoon on Friday. Another good trade, really pleased that we took it. Again, there were subtleties for the double top, but sometimes it's just about trusting the setup. We watched it ramp up into the 158. The SPY was still strong at the same time. One thing I liked about Nvda was that it was struggling here while the SPY was really pushing. It pushed into the 158 again. At this point it was failing. SPY was pushing pretty hard and it wouldn't take Nvda with it. So we took a position on Nvda on around this candle here. 157.80s, 78 to 80s. We didn't top tick it quite, but Jesus, for Nvda, 20 cents off the top wasn't too bad. We took our entry here. Sorry, come on. We took entry on Nvda around here, okay, just as it was off the top and crossing through the EMA 9. Risking off somewhere around here. Yeah, it kind of didn't know what it wanted to do for a while, but you know, we kind of said, look, let's just sit on it, let it do its thing. It'll either stop us out or it'll give us a decent trade one way or another. SPY started to coil around this time here. The SPY was really starting to coil and Nvda was moving down, which was good, so it gave us confidence in the trade. It was putting in a series of lower highs, okay, which is always good to see. Series of lower highs. Then we got a push down and then we got a push back through these major moving averages. Took off half here, okay, as it broke the EMA 50 and 100, which I actually use. I've explained to you guys the EMA 100 on the 1 minute is an exact replica of the EMA 20 on the 5 minute, and I know a lot of 5 minute traders use the EMA 20. That's the only reason I use it. I don't have to keep an eye on the 5 minute chart all the time because I know where the EMA 20 is. Alright, that's why I use it. Took off half there. Now, what I did do, let me just get rid of these, is I identified a level here. Okay, I identified a level here to set our stop. Okay, and we'll show it here. Okay, you see these 2 candle tops here? That's the level I identified as a stop for my next profit stop. So I set my stop here, above it, just nicely above it. Okay, give it about 15 cents over the top. Put the profit stop in there, and it never touched. All right, it was great. Took it off here, set stop, and it held this little level that we put in here. And then we got a nice wash, some resolution to the trade. It sort of held this 155 area. took some off around here, and took my final piece off just over here. Okay, as we broke back over here. So yeah, a good trade for us on Nvidia. I think it was about 2.5 points per share on best covers. So to those of you who took the trade, yeah, well done. It was a good trade. We sat back, we relaxed. It was like a 2.5 hour trade. It was stress free. Just a case of setting some stops, profit take stops, and sitting back and doing other things. That was our Nvidia trade. So yeah, well done. Again, the subtleties of the candlesticks here helped with the decision that the double top was going to work. The nice wicks, similar to the Facebook trade. So make sure you're watching for this, guys. Make sure you're learning it, and make sure you use it in your trading. Remember, we're trading from extremes. This was an extreme. Okay, it pushed hard. It was up at highs. It had a long way to come down. This is what we're looking for: extremes double top, extremes at double bottom. Okay, thanks guys. I will catch you in the trading room tomorrow. Hope you've enjoyed a long weekend, and I will catch you later. Adios.